Hello, this is a TradeSight market recap. I wanted to walk you through, this is more of a lesson than a recap. I wanted to give you some tips on how you can utilize the difference between the futures and the cash indices for gap fill purposes. So let's talk about what we saw on Friday in the markets by looking first at Thursday. This is 5-minute bar charts on the ES, this is the S&P E-mini futures on Thursday right here, and then before that was Wednesday, the back hour or two of Wednesday right here. So we got a gap up on Thursday. We did not fill the gap. 80% of gaps fill the same day, 95% of them fill within a week, which means that within a week there's a 95% chance that you're going to come back to this price that you were at for the close on Wednesday, but you didn't do it on Thursday. Okay. Now, keep in mind that the futures really they close 15 minutes after the stock market itself closes. So the stock market closes at 4 p.m. Eastern time, and the futures close at 4:15, which means on a 5-minute time frame, you've got 3 extra bars. These last 3 bars, 1, 2, 3, on the futures are extra compared to what the stock market close was. So the stock market technically closed right here. So if you were to look at the S&P itself, the S&P cash index, would have been the close right here. The chart would look similar, just a slightly different pricing. And then the futures sold off after the close ahead of some earnings on Thursday, or as some earnings came out. So let's take a look at what happened. We're going to walk you through Friday, and here's where we start. Okay, first of all, we drop down here on the gap, and this takes us below this gap fill. So we've now filled the gap from Wednesday by doing this. Now you have a new gap above, and keep in mind this was Friday. It's end of month, which is technically usually a slow session, and we don't have a lot of expectation that the market's going anywhere, and it just makes it more likely that the gap's going to fill, because if the gaps if they're not going to do much with the market and they get a gap, they really wanted the pricing to be back up here for their month end statements. So we do start to sort of drift up. We're not very exciting, by the way. This was a really choppy session. We didn't see a lot of consistency. You're going to hear some alerts go off as I do this. Didn't see a lot of consistency in the move. It was certainly chop up, chop down, chop up, chop down on the way up. And as you can see, here's the rollover. This actually took us back to what I call a VWAP. But again, let's focus for now on the futures gap fill, okay, and see when that happens. So I'm going to kind of high speed it here into now we're getting near lunch, and you can see we've almost filled this gap on the futures. Now, question is, a lot of times when you fill the gap, that's all you get. Market styles out. So there's your gap fill right there, okay, right over lunch. Now, what ends 9-bar setup? That's our tool going off. Now, what happens from that point forward? All right, first of all, nothing. Half hour of pure sideways action, right? And then here's the thing that's interesting. What do you do from here? Well, keep in mind that even though in this case we filled the gap on the futures, we haven't yet filled the gap on the S&P cash indices, because those closed 15 minutes earlier on Thursday. So that would have been right up here, remember. So let's take a look, and I'll show you the S&P cash chart in a moment to make this even clearer. But let's walk you through the next couple hours here. And now we're heading into the afternoon, about to end there's the last 2 hours of the day on Friday. And watch this. Sorry, there we go. Now we're into the last 2 hours. And here we are. See how we're reaching up, and we're going to get near this price level. Now look, remember that the blue numbered counts that you see are our Comer at work. And when we get to a 13 sell signal on the Comer, a 13th number, that would be the sell signal on the Comer. So look what happens, and you're going to get another loud sound when we get that number. But watch this. 1, 2, 3. Guess where we are before I hit the button to get you the 13? We've basically filled the gap right here, haven't we? To the cash indices. So this is where the S&P cash would have closed on Friday. So we filled the futures gap here, but still eventually got drawn up. And guess what? We did that right with a 13 sell signal. And I posted this for our subscribers because this was the point where you wanted to sell short the futures. So here you're going to hear a loud sound when we get our signal. And we sold short at 1788. Okay, and the very next bar starts to head lower. And look how the rest of the day played out then. That was it. That was the high of the session. Now let me move this chart on top of that one to show you 5-minute bars. This is the S&P cash index. And again, you can see it really clearly here. Without those extra 15 minutes after the close, this is the close on Thursday. This is what we reached up to hit. Now this one got a slightly different bar count. This is actually the seeker tool that has this 13, but we're still targeting that gap fill. So it's interesting. You fill the gap on the futures, but you still have a gap in this case on the cash indices. And then you've got to reach up to do that. And at the exact moment that you reached up to that price point, this is the futures again, we get a 13 Comer sell signal right there. So you've completed the needed gap fill and you get a 13. That's a real strong signal to reverse. And we made some really good money today on the futures. So I hope that's been beneficial to understanding the difference between the futures and the cash indices and how you can actually follow both to understand what the market's doing. The charts, as usual, brought to you by eSignal 11. Have a great trading week.